Hi everyone, this is Joe Gentili from Sarraf Gentile LLP. Today I want to talk about some of, not all, but some of the pitfalls related to indexed universal life insurance or IULs. These are very popular, highly marketed insurance policies right now, particularly on social media. And they promise all sorts of fantastic things like you can get the gains of the stock market risk-free. They could be tax-free. They're better than 401k plans. All sorts of fantastic promises that a lot of times the way they're presented, they're really half truths. And these are also, in my opinion, the single most complex financial products that are marketed to the general public. So there's a lot to unpack with them, more than I could unpack or should unpack in a single video. So the pitfall I want to talk about today is that a lot of people don't understand, and this is pretty basic for all universal life insurance policies, is that universal life insurance is essentially it's term life insurance for life that has a savings component attached to it, and the returns in that savings component and the money that you put into it are there to basically offset the higher cost of insurance that comes later in life. So with a whole life insurance policy, they have level premium. So it looks really expensive in the beginning. They charge you more than the cost of insurance in the beginning. This way you build up a fund to offset the higher cost of insurance later. So those policies look really expensive in the beginning. They look really cheap when you're older. And it's guaranteed level. So regardless of what happens at the insurance company, as long as you pay the prescribed premium, the policy stays in place. Universal life is more flexible. Universal life, you have a target premium, but you could put in less, you could put in more, as long as you're covering the cost of insurance, the actual cost, which is like, think about it as the cost of like term insurance for 1 year. When you're young, it starts out really cheap. It's really easy to meet that amount. And as you get progressively older, it gets really expensive. And if you don't fund it often, fund it with enough money, very easy for the cash value to get depleted in those policies in later years and for the policies to lapse while the person is still alive. So one of the pitfalls is you have to, if you have a universal life insurance, an index universal life insurance policy, you need to keep an eye on that every year, because it's very easy without noticing to build up a deficiency in the cash value early, such that you're setting yourself up for a lapse later on. You can pay the target premium every single year, the exact amount that was set in the policy, and still lapse the policy later on. How is that? Because if you have an IUL, and let's say that your target premium is set, assuming that you're going to get an 8% return or a 6% return with the policy going forward, but you're not actually getting that amount. Maybe you're averaging a 4% rate crediting rate or a 5% crediting rate. Over time, you're going to build up deficiencies, and you're not going to have enough cash value in there to overcome the ever increasing cost of insurance. So you can pay the target amount and still lapse it. So the pitfall there to watch out for is the cost of insurance, and the premium payment to keep the policy in force is not guaranteed in a universal life insurance policy. So you need to monitor it to make sure that the policy is healthy. How do you do that? Ideally, you're going to talk with an insurance agent or an insurance professional every year, every other year. You're going to have in-force illustrations from the carrier to see what the policy looks like if you keep funding it the way you do. Does it show a lapse within, a relatively early time in life, or does it look like it'll be permanent coverage? So that's the biggest pitfall that I'm going to go over today. There's a few more big ones out there. So that'll be for future videos. But if you have any questions, if you'd like to have an attorney review a universal life insurance policy that you've purchased because it looks like the policy is not performing as you expected, please feel free to reach out. We're happy to help. So thanks and have a great day.